This is Bloomberg Surveillance Early Edition with Dani Berger and Kriti Gupta.
It's 10 a.m. in London, 5 a.m. in New York, 5 p.m. in Hong Kong. Our top stories today. The Fed keeps its options open after raising rates to a 22-year high. Jerome Powell says further hikes will be data-dependent as officials fine-tune their policy. Attention now turns to the European Central Bank. A rate hike is on the table, but will today's move be the last in the cycle? Bloomberg is live in Frankfurt as the ECB decides. And the global earnings parade continues. Meta surges after a sales beat in a sign that ad spending is back. Welcome to Bloomberg Surveillance Early Edition. I'm Dani Berger in London. Kriti Gupta is in New York. Kriti, I got to be honest, I'm way more excited for the ECB today than I was for the Fed. It was a snoozer, but it was kind of meant to be a snoozer. No surprises, no fireworks.
And I think that's really what's creating a little bit of a tailwind when it comes to the markets, because that is where you're seeing fireworks. A little bit of green on the screen, Dani, this morning. Now, look, it is 5 a.m. New York time. Traders are just getting started here stateside from a macro perspective. But take a look at this. S&P 500 futures already higher by 0.6%. I'll do you one better, Dani. Look at NASDAQ 100 futures higher by 1.2%. Essentially, this idea, that key line in the presser yesterday, that the Federal Reserve staff thinks that maybe a recession is now off the table, that a soft landing was indeed achieved. Of course, we will see if that's true in retrospect, but it's enough to give a little bit of a push to these equity markets a little bit higher. Add on the earnings beat you saw from Meta after the bell yesterday, and it gives you an extra boost into the tech sphere. The idea that ad spending is back. We're going to dive into that story throughout the hour as well. But look, the bond market is, I think we're getting that snooze fest concept from 386 on a 10-year yield, virtually unchanged at the moment, but the direction of travel is still in the positive direction. A lot of that volatility is going to come from what you hear from the ECB today, the read-through from the other side of the Atlantic. What's interesting to me, though, is that the FX market is doing something wonky on its own, because if you look at the dollar, you are seeing broad weakness, down about 0.3%, but its biggest index contributors for the Bloomberg Dollar Index is coming from Mexican peso and the Bank of England, the two most hawkish banks at the moment in the world right now. Nevertheless, dollar max below that key 17 handle, down about 0.5%, Dani.
You know it's going to be a good day when Kriti Gupta uses the super peso on her market board. All right, I've got a Europe wrap up here. It is all about earnings in Europe until we get the ECB. That, of course, will be the main show. Do we get a shift to a more dovish stance from them? For our TV audience, I got a little bit of weirdness on my screen. There we go. It's all fixed up for you. European stocks, those are up more than 1%. All right, we're going back and forth here, but European stocks, there we go, full for you, up more than 1%. The euro, here's where we're seeing some strength coming in versus the dollar. Again, this makes me scratch my head. Why is the euro so strong when the data has been so weak? It really comes down to the fact that it's the dollar moving things. It's perhaps a Fed that didn't have any hawkish surprises in their decision. It's also benefiting sterling. But this is what I come down to as to why this is more about the Fed than it is the ECB, because German yields are ticking lower by about 2 basis points. If this was a story of a more hawkish ECB, that shouldn't be the case. But instead, Kriti, we're seeing Germany and really throughout all of Europe just track the American bond story.
Yeah, and I think it's going to be perhaps a little bit of a role reversal in just a couple of hours, to your point, Dani. But let's stick there. Let's stick to that stateside story. The Fed raising rates to a 22-year high with this 11th hike of this tightening cycle. Markets speculating whether we're at the peak as Chair Powell leaves the door open for more hikes.
I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We're going to be making careful assessments, as I said, meeting by meeting.
Bloomberg Markets editor Phil Serafino joins us now. Look, Dani called it the snooze fest, and it did kind of feel that way when you heard from Chair Powell. Yet you're seeing the equity markets really rallying off of that news. Is it safe to say that we've achieved a soft landing?
It's hard to believe, but it does look that way. I mean, a lot of people have been skeptical, myself included, that the Fed could thread that needle, bring inflation under control, and not trigger a recession. The equity market's been optimistic about that for months. You know, you look back to the lows in March, right after that mini panic around regional banks in the U.S., the equity market has taken off, and the things that are leading are, tech, financials, consumer discretionary. So the market has been pricing in sort of the perfect outcome, and at least at this point, that's what they've gotten. Now you have to look ahead. Powell says it's all data dependent, so the next couple of months, people are going to be laser focused on those inflation reports.
As not to be left out from the monetary policy fiesta we're getting this week, the BOE, which goes at it next week, a great scoop from the Bloomberg team that the Economic Advisory Council, which I should say Kriti and I have had members of the council on this show ourselves, have said that they are worried about the BOE going too far, going too fast, hiking too much. Surely, Phil, this is not the UK Treasury meddling in monetary policy? Because it sounds a bit like that.
It does indeed. And, you know, it's important to note that the UK has been an outlier all along. Inflation has been running much hotter. The economy, you know, the economy has been in tougher shape, and they have a lot farther to go. You look there, inflation's still hanging close to 8%, whereas the US has gotten it down to 3%, the ECB has gotten things down to 5% in the Eurozone. So it looks like they have farther to go, and I'm not sure how well the markets would take it if the BOE were to back off in the face of what looks like political pressure.
Yeah, again, we know this UK bond market is one that is unforgiving to Andrew Bailey, so the bond vigilantes would have none of that, I'm sure, Phil. Thank you so much for joining us, Phil Serafino there. Okay, now our focus turns to the ECB. President Christine Lagarde's expected to follow in the Fed's policy footsteps with a 25 basis point rate hike later today. Our European correspondent Maria Tadeo is at that meeting at the ECB in Frankfurt. Maria, this decision, much like the Fed yesterday, was widely expected. So rather than the 25 basis point hike itself, where is our focus going to be on today?
Yes, Dani, and it is expected. And of course, nothing is official until she makes it official. And that is, of course, the head of the ECB, Christine Lagarde. But again, she pre-announced this hike today in the previous meeting, repeated this idea in Sintra that inflation, well, maybe cooling down somewhat, but is still projected to be seen too high for too long. So therefore, warranted action was needed for today. And then, of course, you have the core CPI print that came in for June at 5.5%. You put it all together and it takes you to this 25 basis points hike today. But you're right. It's not so much about the monetary policy decision per se, but it really is about this press conference and the guidance going into September. We know that July was seen as a necessity by the central bank, but September is up for play, and that is where the focus will be. Any indications, any inclinations from the European Central Bank in terms of what the future path for rates will go.
And of course, with September in focus, you mentioned the future paths of rates. Just how important is this press conference then? I mean, what kind of precedent could Madame Lagarde actually set?
Yeah, and it will be key because, again, it's about the calibration of the message, as a messaging, it's a language, it's a tone that she will use. And look, there's many ways that this could go. And of course, we're waiting for that press conference to figure out exactly what is the message she wants to deliver to markets. On the one hand, you could argue, well, she's still going to focus on we're a single mandate central bank. There could be a hike with a dovish pivot or just altogether. And the ECB that decides to be just neutral, no actual bias either way. Just look at the data, revert back to mega data dependent, and wait until the summer break when you have this idea of the monetary policy, the lag behind it, also the trade-off between inflation and the economy. We got the London survey, we got the PMIs. This is really an economy that for the time being remains under pressure. So it really is about the signaling. And you could argue they have an incentive to just keep flexibility altogether, to keep all options open and just mega data dependent. Remember, go back to that line that she used to repeat up until a few months ago.
Maria, be honest with me. What's more important today, Lagarde and the ECB or Mbappe and Real Madrid?
Mbappe and Real Madrid. Look, wow, that's a very difficult question. Look, what I will say is he wants to play for Real Madrid. I know it. You know it. My 85-year-old grandma knows it. This is just a question about putting a number on that contract. Mbappe, you know, if you watch this, s'il te plaît, just make a deal now. If you need a house in Madrid, I help you, but you need to really put an end to the saga. It's been going on for too long. We know you want to play for Real Madrid. Let's just put an end to this. And I'm sure he watches because obviously he cares about his personal finances. I mean, it all comes down to the money ultimately.
True. True. Well, you heard it here first. Mbappe, if you're listening, Maria's 80-year-old grandmother will happily have you as a roommate. Maria today reporting from Frankfurt, everything from monetary policy to football. And tune in. I love it. Okay, great. If he wants to live in Brussels, sure. Maria's also got a place for you there. Tune in to our special coverage of the ECB decision and press conference at 8:15 a.m. New York time. That's 1:15 p.m. if you are in London. All right, the big week of tech earnings continues with Meta topping forecasts for second quarter sales. CEO Mark Zuckerberg spoke about the company's bet on the metaverse on the earnings call.
I can't guarantee you that I'm going to be right about this bet. I do think that this is the direction that the world is going in. There are a billion or 2 billion people who have glasses today. I think in the future they're all going to be smart glasses, all the time that we spend on TVs and computers, I think that's going to get more immersive and look something more like VR in the future. Like all of these trends line up to make me think that this is the right thing. I think we're going to be happy that we did this.
Joining us now is Matt Bloxham of Bloomberg Intelligence. Matt, usually the market doesn't love the idea, or at least in the recent past, didn't love the idea of Meta spending a lot of money. But this time, the focus wasn't on that because shares are up 8% pre-market. What's the concentration for markets?
Yeah, well, it's definitely not the metaverse. Yeah. It's all about AI. And I guess what's happening with that ad revenue. So it's a pretty simple business. They make their money from selling advertising. In the quarter, we saw that ad impressions were up 34%. Pricing on those ad impressions is down 16%, but the trend's an encouraging one. And for the next quarter, they're expecting an acceleration in the growth. So ad revenues is up about 12%. The quarter just reported, maybe about 20% up in the next quarter. And there's a couple of things going on there. First, Reels, their kind of TikTok rival, is getting more and more traction. So that's encouraging, and that's helping to get people to spend more time on Facebook. The second is how they're using AI to promote new content to users. So making you say, hey, you're kind of following this person over here you don't follow, they've got some interesting content, let's show that to you. And that's also helping to boost time on Facebook, and that allows them to sell more ads. And so I think people are encouraged that the momentum is improving. They're getting traction with some of these products and on AI.
Well, Matt, at the core of that is these AI processors. It's more expensive. It requires more chips as well. Let's bring another player into here, Samsung. How well placed are they to tap into that rising demand for the AI space?
Yeah, not so well placed now, but they're clearly pointing to improving trends in the second half of the year. And the AI is throwing up all sorts of new buzzwords. A new one we've got is high bandwidth memory, and this was a big announcement from Samsung today that they're planning to double their production capacity for those high bandwidth memory chips by 2024, and those chips are essentially what allow you to train AI technology for things like generative AI. So I think they're going to be a bigger player there. I think inventory has really kind of hurt them in the first half, but they're expecting that to unwind. They said inventory peaked in May, and they're expecting demand for chips to pick up in the second half of the year. They're not the leading player in that space. It's one of their local rivals, SK Hynix, which is the big rival, but they're clearly trying to make a bigger push in that space. And clearly AI is going to be a massive part of the technology market over the next 5 to 10 years. So it's definitely the right thing for them to be doing to shift investment in that direction.
Matt, thank you very much for all of that. That's Bloomberg Intelligence's Matt Bloxham. And later today on Bloomberg, we're going to be hearing from the Meta CFO, Suzanne Lee. That will be at 12:30 p.m. Eastern. First, though, coming up on this show, a beat for BNP Paribas and a miss for Barclays. We'll have more on today's European bank earnings and some more earnings divergences, this time between Mercedes and Volkswagen. Mercedes boosts its outlook. Volkswagen paints a gloomier picture. All of that next for you. This is Bloomberg.
If you look at equities we are performing a tad better than average. And if you look indeed at FIG, it's basically a tad lower. And the reason it is a tad lower is that BNP Paribas is a European powerhouse when it comes to fixed income. And one of the elements that we saw picking up in the previous quarter is basically the US-based credit cycle. And so BNP Paribas is more European, therefore is on that part a little bit different. But if you look again at CIB as a whole, the bottom line is up 5%.
CFO of BNP Paribas there speaking earlier on Bloomberg Television, calling it a European powerhouse. Jan-Patrick Barnett joins us now for more on today's European bank earnings. Let's start there with BNP. Look, they called it a European powerhouse. We know it's one of the largest banks in Europe. What kind of tone are they setting for Europe at the moment?
Well, I guess if you ask the big banks, everybody says he's a European or a European powerhouse. So That's kind of interesting. Well, I mean, the thing is, like, the operational business was not too bad. I mean, like, interest rates are still helping the bank, of course. We're seeing some softness in the fixed income trading, which is a traditional strength of BNP, and that's not perfect. But the shares are up because BNP is pulling an old European banking trick, and that is, if your operating business cannot like convince too much, then you just like screw the costs a little bit tighter, and they did this very successful in this quarter. And that's something that I was surprised by a little bit, because I thought like the European banks are like pretty much have reached the lowest cost base that they can. But it seems like there's still room for improvement, and BNP did this, and so shares are up by about 3%.
But the blessing and the curse of higher interest rates is, okay, it can benefit someone like BNP Paribas, but JP, it looks like Barclays is a really good example of what happens when NIMs peak.
Yeah, absolutely. And we saw this already yesterday with the reporting from Lloyds, that we have like diverging paths here in Europe, where the EU rates are still like providing some tailwind for the banks, while in the UK, it seems like the peak is behind them and all the benefits are reflected in the numbers. So that's not boding well for Barclays, who cut the guidance for the rest of the year regarding their net interest outlook. Still, like, Barclays also has the issue that the sentiment towards the bank is not great over the past year or two. So the numbers actually, I would say, were not like too bad. But if you are in a position like Barclays where investors really don't like your stock, you have to be like super convincing and super strong on your numbers. And they just couldn't show that. That's why the stock is like down 4% today.
Yeah, some interesting divergences and messages coming from the European banks space. Bloomberg's Jan-Patrick Barnert, we thank you, as always, for breaking that down for us. We go from banks to cars. European auto giants also reporting this morning. Volkswagen, the odd car maker, out in an otherwise upbeat earnings season for the industry. Bloomberg's Oliver Crook spoke with the CFO on earlier. He says he's optimistic.
There's a certain uncertainty on the side of the customers in terms of inflation, but I personally don't expect a recession in the next quarters. And for the automotive industry, both this year and also next year, we are quite optimistic. I expect a small growth, 4 to 5% for the automotive industry next year. And this is also true for the major region, mainly US and Europe, and China perhaps a little bit lower.
Oliver Crook now joins us for Berlin. Oliver, look, the Volkswagen CEO, the chairman of the Federal Reserve seem to be on the same page when it comes to the macro. Talk us through the key takeaways.
Yeah, absolutely. I mean, Volkswagen came in as kind of the weakest one of all of the bevy of earnings that we've had today. You know, they kind of cut their outlook in terms of deliveries a little bit, but still, you know, not a catastrophic quarter. What was most interesting about VW was the news overnight, the partnership with Xiaopeng in China, where they're buying a 5% stake in the company to partner up to really reinvigorate their EV sales in China, which are really lagging behind. And now if we breeze through some of the other companies, I'll do a little word association. Mercedes, Maybach, up 40%. The luxury trade is still in. It's all about costs going down, margins beating. Renault, record margins there. And Porsche signaling some issues on the supply chain. But again, a solid quarter. Regionally, really, it's the United States that is showing resilient. Europe is a little bit more mixed. You know, it's going to grow a bit. However, what we're learning from this, as you were saying, is that the soft landing narrative is really applying here for the auto sector.
Oliver, elsewhere, the Dutch Coast Guard is still trying to extinguish a fire that a cargo ship carrying thousands of cars was on. At the moment, it seems like the thought is that potentially this was an EV that caught fire. What have the car makers you've been talking to saying about this? I mean, if anything, this is not a great image for them.
No, and that's still speculation. We don't know yet, but we know that of the 2,857 cars, 25 of them were EVs, reportedly, and the speculation is that one of those caught fire. And this blaze is still going. We're coming in on 36 hours of this burning. So whose cars are they? I spoke to the Mercedes CEO a little bit earlier. Here's what he told me.
About a tenth of the vehicles on that ship are Mercedeses. And we're in contact with authorities to establish the facts. So we're looking into that as we speak. And as the facts become clear, then we'll see how things unfold.
So if that's about 300 cars that belong to Mercedes, that's still 2,500 cars. We don't know who they all belong to, but we know that Ford, Stellantis, Renault, Nissan, Toyota say it's not their cars. BMW says that their cars are aboard. So we still have to get more details on whose they are. Really, the focus now is extinguishing this fire, which is, as you can imagine, a very complex operation. The craziest thing, perhaps, is that this is the second time that this has happened in about a year and change. We lost 4,000 VW vehicles last year in the Atlantic.
Yeah, that is incredible, Oliver. I honestly had no idea that this is something that had happened before. Oliver, really fantastic interviews. Bloomberg's Oliver Crook there in Berlin. Coming up, we're going to take a look at some of the other earnings out of Europe, some big movers to cover. This is Bloomberg. Quick check on some European movers this morning that reported earnings. Nestle is one of them, Kriti. A big gain, the biggest gain in 6 weeks. Their guidance was lifted. It's all about the pets. Their Purina cat and animal brand saying performs the best for them. Shell, that is tumbling. A tough quarter from a high bar, but they did announce $3 billion worth of buybacks. And then one of the best performers, Universal Music Group. Kriti, I'll give you one guess as to which artist has made the most money for them when it comes to merchandise. Who do you think that would be?
I mean, I want to say Enrique Iglesias, but I know it's not him.
Oh, I love that. I wish it was him. It was Taylor Swift. Come on, Kriti. I feel like it's, I mean, it was too obvious, so I appreciate Enrique instead of that. All right, coming up, we're going to get back to the serious talk. It's Esther Reicheit of Commerezbank joins us on the ECB next. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. Here's what you need to know. The Fed keeps its options open after raising rates to a 22-year high. Jerome Powell says further hikes will be data dependent as officials fine-tune their policy. The attention now turns to the ECB. A rate hike on the table, but will today's move be the last in the cycle? Bloomberg live in Frankfurt as the ECB decides. And the global earnings parade continues. Meta surges after a sales beat and a sign that ad spending, well, it's back. I'm Kriti Gupta in New York with Dani Berger in London. Look, Dani, it's about 48, I'm going to argue 72 hours of central bank palooza. But when you look at the bond market, the stock market, earnings still playing a really big role.
They absolutely are. It's what's moving European markets here, Kriti. Although I will say, out of everything today, I still can't get over Maria Tadeo telling us that her 80-year-old grandmother would house Mbappe if he went over to Real Madrid. I think that's the real story today, not Christine Lagarde and the ECB. All right, I digress. European equities, they're up 1%. It's exactly because of the earnings story, Kriti. A lot of big caps reported and reported well. Nestle, consumer goods, car makers, banks. We were just talking to our reporters about it. The euro continues to strengthen against the dollar, as does sterling. Can that sustain itself if we get an ECB today that maybe takes a slightly more dovish turn? We're going to be talking with Commerezbank about that in just moments. But it's clear that the bond market is not necessarily indicating any more hawkishness than that of the Fed, because German two-year yields, they are moving lower by about 2 basis points. So we're buying bonds much like we are in the U.S., Kriti.
Yeah, and it's interesting that some of that sentiment that you're seeing in Europe is already having a read-through into the U.S., although I would argue it's perhaps, I want to know what the opposite of a hangover is, but whatever it is, it's this continued story here in the States. The S&P futures, you are already seeing a rally on our hands, higher by 0.6%, but the real outperformance comes in those tech shares. NASDAQ 100 futures higher by 1.2%. And look, this is the combination of both the macro and the micro working in the equity market's favor. Essentially that the Fed came out and said, look, the recession risks that we saw maybe a couple months ago, they're off the table. It's no longer part of their key thesis. And on top of that, you have Meta earnings that are saying ad spending is back. And look, we know that in the tech space, that ad spending is very geared and very exposed to the economic cycle. So good news from both a macro and a micro perspective. But Dani, to your point, the 10-year yield far more exposed, perhaps not necessarily to the Federal Reserve, but to the ECB. What we're going to hear from them in the next couple of hours. Right now, 387 on the 10-year yield. I got to bring your attention to the FX space, though, because you are seeing broad weakness weakness into the dollar. That kind of makes sense given the macro narrative that you were seeing from the Federal Reserve that they might be nearing the finish line when it comes to hiking. Nevertheless, the biggest contributors to the Bloomberg Dollar Index are the Mexican peso and the pound. And that really is crucial because those are the two most hawkish central banks in the world right now, sending dollar mex below that key 17 level, 16.75 there, weaker on the dollar by about 0.5%, Dani.
Yeah, it is a market convinced we're in the middle of the dollar smile, and that came after the Fed's 11th rate hike of this cycle. Kriti, we've been talking about it all day. It's the Fed funds rate at its highest in 22 years. And investors are saying we're likely at the peak. They've trimmed their bets on further increases from the central bank this year. Here's Chair Powell at the post-decision news conference.
The staff now has a noticeable slowdown in growth starting later this year in the forecast. But given the resilience of the economy recently, they are no longer forecasting a recession. We'd be comfortable cutting rates when we're comfortable cutting rates, and that won't be this year. It's really a question of how do you balance the two risks, the risk of doing too much or doing too little. We're coming to a place where there really are risks on both sides. It's hard to say exactly whether they're in balance or not. I would say it is certainly possible that we would raise funds again at the September meeting if the data warranted. And I would also say it's possible that we would choose to hold steady at that meeting. We will continue to take a data-dependent approach in determining the extent of additional policy firming that may be appropriate.
That is a man who did not show his hand. Chair Powell really keeping the door wide open. And the quote of the day yesterday, it has to go to Seema Shah of Principal. Here's what she said. Getting a rate signal out of Powell today is like getting blood out of a stone. He's keeping it tight. He usually slips up a bit, but he seems to have mastered it now. What does it mean to the markets to have a chair who has mastered the art of keeping his hand close to him? Joining us now is Esther Reicheit, FX Strategist at Commerezbank. Esther, what do you make of this, making of a Powell who didn't indicate either way of where the Fed was going to go next after yesterday?
Well, I think he made a great job because that's the best the Fed can do right now. Like with the hike yesterday, they basically kept the door open for reducing the rate hiking pace to one rate cut every second meeting. Or, of course, they can simply change their projections in September if necessary, if the data coming out throughout the summer indicate this. And like in retrospect, they could have ended the rate hiking cycle yesterday. There is just so much uncertainty about economic developments, inflation developments, and I think that's the best they can do right now. And I think the flip side of that, like of not being in this comfortable position of keeping everything open, we will see that tomorrow in the for the ECB, because they are not, they are in a much more difficult position to master this communication.
Exactly. I mean, no, I got you, Esther.
It's communication,
Yes, communication is difficult for us all. Look, okay, on that point,
all about
the ECB,
communication.
Yes, exactly. Well, the ECB, we had Klaus Knot, once a very hawkish member, refusing to commit to a September rate hike. This is different from him. This is something we haven't heard before. Do you think that's a taste of what we're going to get from Madame Lagarde today?
Absolutely. In my opinion, this was like the first indication that the ECB is slowly shifting to a more cautious stance, And I'm not, of course, every member is speaking for its own, but like always, it has been remarkable how they've speaking in one voice in the past, and this is changing now, so clearly they are shifting to a more cautious stance. But like if you look at market expectations, it will not be that easily because they have still been very cautious, very hawkish at the last meeting, and like now turning, like switching, and maybe like indicating maybe there will be a further rate hike, maybe there won't. This will, in my opinion, there is the high chance that this will be or that the market will react very disappointed to this, and that we might actually see at least temporarily a clearly euro negative reaction to the ECB tomorrow.
Well, what's interesting when we're talking about some of these central bank divergences, I'm curious, Esther, about how that translates to the actual trade here. Because if you look at that kind of dollar story that Dani had kicked it off with, the biggest movers are sterling, it's the peso. To what extent are interest rate differentials still driving the FX trade, making kind of it a no-brainer in your universe? What do you think?
Yeah, actually, I think in particular interesting is the Mexican peso there, because this indicates it's not just about, like interest rate differentials, because for the Mexican central bank, everybody waiting is waiting for a signal how soon they are going to start cutting interest rates. Of course, they will still have attractive real interest rates, but, like with the Fed stopping, with U.S. inflation coming down, and with Mexican inflation actually, like leveling off, the interest rate differential will not increase. Still, the Mexican peso can still gain. So in my opinion, it's all about credibility for the central banks. And this high uncertainty about economic developments in the Eurozone, in the US, in my opinion, put US dollar and the euro a little bit on the back foot, at least compared to central banks who managed this whole challenge much more credible than US and than the Fed and the ECB.
It's interesting that you mentioned kind of this carry trade that's already in play here. Esther, talk to us a little bit about currency weakness, though. We're continuing to see some of these banks around the world stick to that hiking regime. The ECB, the Federal Reserve, may be nearing the finish line faster. But for the folks that are sticking to that hiking story, when does that translate to currency weakness?
Well, yeah, that's exactly the important part. In my opinion, when it becomes clear that the Fed has actually finished its rate hiking cycle, and as soon as rate cuts come into play, like this will be the pivotal moment. And, like with the U.S. or with the Fed keeping its option open, in my opinion, this moment is actually shifted more into the future, because, like rate cuts will only be discussed if it's fully clear that the Fed has ended its rate hiking cycle. So in my opinion, like we are a little more or a little longer in this wait and see moment due to yesterday's Fed decision than we might have expected at the beginning of the month.
But Esther, the strength of the euro seems to just defy expectations. When you look at the data that's come in, PMIs, hugely disappointing. The ECB's loan survey, the worst since even before the great financial crisis. This isn't just because I don't want to pay too much for coffee when I come see you in Frankfurt next. It still seems strange the euro is as strong as it is. Can those gains sustain themselves?
Yeah, I totally agree. In my opinion, I definitely see the higher risk for euro dollar to the downside, in particular in the short term. The big issue is that the ECB is still much more focused on inflation, and inflation levels in the Eurozone are still much higher than in the United States. So the room for the ECB to get more dovish or, even to discuss rate cuts, that's not really credible in the very short term. There is definitely more room for the Fed, and in my opinion, that's still a supportive factor for the ECB. Plus, we also have to look at quantitative tightening there. I think this is definitely a surprising development for the ECB. I think many had expected that this will take much longer for them to come down from their asset holdings. And this might also be a supportive factor, because that's definitely something that has not been considered for the exchange rates over the last few months, because the focus was so much on interest rates, and this might change now.
Certainly a lot to digest, a lot of different cross currents. Esther Reicheit of Commerezbank, all over them. We thank you as always for joining the program. Coming up, we go from the macro to the micro. Shares of Meta rising after beating on revenue and their forecast. We're going to dig deeper with the head of global TMT research at Itau BBA. Stick with us. This is Bloomberg.
I feel like we're getting to a good place on that with Threads. There's still a lot of basic functionality to build. A few years, once we get to the point where it's at hundreds of millions of people, if assuming we can get there, then we'll worry about monetization. But I mean, that's basically the playbook that we're focused on. And
Meta CEO Mark Zuckerberg speaking there on yesterday's earnings call. Joining us now for a little bit more insight, Thiago Kapulskis, head of global TMT sell-side research over at Itau BBA. Thiago, let's dive right in here. I mean, about a year ago, Meta was talking about going all in into the metaverse, really kind of perhaps staring a little bit clear of the AI universe and an investment that a lot of its other peers were making. Now really saying it's still all about ad spending. How long does that sustain, do you think?
Oh, it's a great question. So first of all, thank you for having me here. So it's just crazy, right? Because when we think 1 year ago the stock was like $95 or even less, and now it's $320, right? We think there's a lot of sustainability for revenues to continue to go up. We wrote about that last night during earnings. I think there are three main factors out there, right? So number one, this is the first time, or actually the second time, that ad loads and prices, go in the same trend, a favorable trend for Meta, which I think, is a factor related to the execution that they're having, Reels monetization, which is very important. They're doing a very good job out there. The macro is actually helping, right? We were talking about maybe hard landing, a few months ago. The economy is doing very well, very resilient. That's definitely very good. And also there's comps, right? So Europe, the numbers in Europe improved quite a lot in the comparison versus last year. I think the work they've done, particularly in Eastern Europe, is definitely helping. So there's a lot in there, and we can only, applaud the execution that they've been doing over these past few months.
Yeah, and you're already seeing the shares higher just in the pre-market session by over 8% this morning. But Thiago, what happened to the concerns about the demographic, this declining demographic, this declining use of Facebook, but also by extension Instagram as well? Are those no longer concerns in this new ad boost that they're seeing?
Great question. I think, they are doing a great job on this, because I think they realized maybe 2 years ago that TikTok was getting a lot of share, and one of the reasons was the recommendation engine that they had, right? So there is definitely, especially among youngsters, I think a different habit of getting more interested in content that is not related to your friends, but can come from anywhere. And that's where artificial intelligence comes into play, right? Because you just need to have the best content and showing it to people at the right time. And I think the investments they've done on AI, which are a lot related to the metaverse, but are also related to their recommendation engine and to the way, people can use Instagram these days.
Yeah, Thiago, on that point, if I can jump in, because he talked also about AI chatbots. He said agents, he called them coaches. He kind of teased some of those things on the call. Not sure completely what those are. What do you make of that push? This feels like something more kind of chat GPT-like coming from Meta.
Yeah. I think you're definitely right. I think they are among the big techs. I think it's of course Microsoft is doing a great job on AI and doing really great things. But I think Meta is probably overlooked into this things, because they are adding a lot into their content. They launched the Llama 1, Llama 2 models, right? Which are actually fantastic. They're partnering with Microsoft to distribute those products out there. So I don't know. I wouldn't be surprised if they continue to innovate and bring new things to improve even more the engagement, right? That and all the engagement metrics, by the way, have been improving quite a lot on Meta, right?
And it's not just new products. I mean, what I'm about to say, you could probably say the same for their AI too, but it's also copycat products. They have Threads. We started out by playing some of the sound from the earnings call when he talked about it. The sound we didn't play, he went on to say, I'm highly confident that we're going to be able to pour enough gasoline on this to help it grow. This is a Zuckerberg who not that long ago was calling this the year of efficiency. Does that worry you, Thiago, if they're going to pour gasoline, metaphorically, of course, onto the Threads product?
Great question. Even though I'm very much in favor of a financial discipline, and I hear a lot from investors, this thing, I'm just glad that Mark Zuckerberg is so confident, and I think you're putting the very right way right here, because it just sounds he's back into the game, right? There was just so much concern last year that, he wasn't doing much, that Meta was lagging behind TikTok and all of that. And now, last night, I think the most important thing was his tone, his confidence that, he's making Threads work. He mentioned that Threads didn't have a very large team, so it was a relatively small investment to make that work. So, yes, very important. But of course, I agree that you cannot only allocate capital on things that you cannot explain, right? But all in, I'm more, I see the glass half full here.
Yeah, I mean, Meta has their hands in a million different products and different ideas. It seems part of the burden and blessing of being a big tech company. Itau's BBA's Thiago Kapulskis, we thank you as always for joining the program this morning. Coming up, a look at some of the market moving events to watch throughout the day. We'll take you through it. This is Bloomberg.
This is Bloomberg Surveillance Early Edition. I'm Dani Burger in London. Kriti Gupta is in New York. Let's take a look at what's ahead on a very busy day today. First, it's the ECB's turn for its rate decision. That will be out at 8:15 a.m. Eastern Time. That will be followed by President Lagarde's news conference at 8:45 a.m. Closely watch for any changes in her sentiment. Then a host of U.S. data out at 8:30. That will include GDP, core PCE, jobless claims, and durable goods. Then the Fed, the FDIC, and the OCC are going to be unveiling their plans for a sweeping overhaul of capital rules. All the banks will be closely watching this one. It's an open meeting that will be held at 1 p.m. Then finally, earnings are going to continue. Southwest Airlines, Royal Caribbean, Intel, and Ford all on deck. Kriti, I know you've been digging through some of these earnings on the U.S. side.
Yeah, there's a lot to go through, I've got to admit, Dani, but let's start with one of the biggest movers of the morning, one of the biggest stories from overnight. Meta, of course, at the top of everyone's list. We just had a great conversation with Thiago Kapulskis about that as well. Meta, higher by, get this, 8.5% in the pre-market, trading about $324 a share. This is their ad sales recovery, really boosting their forecast. But look, it's something we had heard from Alphabet as well, at a time when their investment on AI perhaps is still waiting to give returns. Even Alphabet said it's the ad revenue that's coming in handy. Same thing with Meta Platforms, higher by 8.5%, Dani. No small margin as early as about 6 a.m. this morning.
And this feels like a sea change in sentiment because previously investors were not forgiving of Meta just pouring money, setting money on fire, adding the gasoline to spending on projects like the metaverse. Now investors, and again, Thiago reflected this, are okay with them doing that, okay with them pouring gasoline onto Threads just because the ad business is so profitable right now.
Yeah, a really great time to experiment, which brings us to some of the other stocks as well this morning to put on your radar. Intel and Ford reporting after the bell, already seeing some green on the screen in the pre-market action. Again, something we saw pre-tech earnings as well. But Dani, in the next few hours, we're also going to get McDonald's earnings, and this is going to be before the market, and this is really important. It's higher by 0.6%. For me, the McDonald's story always reminds me of the currency story. 60% of their revenue comes from abroad. So if we're talking about dollar weakness, that is a built-in tailwind for McDonald's.
Interesting. I also wonder how much McDonald's actually benefits from a weak consumer. It's cheap food. We talk about this with the budget airlines. They do better. People maybe aren't willing to pay up, but they still want to eat out. Maybe they just go to McDonald's instead.
I mean, it's absolutely a possibility. The question is how much appetite, excuse the pun,
Nice.
there really is
like
there. You're welcome. Is there really for expansion for something like McDonald's globally, especially when they are trying to really hit not just the emerging markets, but the frontier markets as well? And that seems to be where the hiccup is. We're going to dive into all of that in the next few hours. That does it for Early Edition. Surveillance is ahead. Former Fed Vice Chair Richard Clarida joins the program. Stick with us. This is Bloomberg.